All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, December 9th, 2021. Another day of backing and filling here. Market's fading a little bit in the PM session, coming off of the highs here. VXX getting off the lows there, a little bit of a bounce there in volatility. And this really just kind of looks like call burning to me for the most part. You do have a bit of a want to show you something here on the hourly. We do have a head and shoulder pattern on the SPY hourly that has triggered, and that should, barring a massive surge here in the last minute of the trading day, that should hold, and that would take you down to about 464, which would coincide with that 200 MA. And this is also the gap window, the green bar low. Got that pivot there that we broke out. That would actually be a strong area for a short-term support level for the market. Should it get down there. So that could happen tomorrow, but ultimately it won't amount to much. I think the market is still in backing and filling mode. We're also waiting on the CPI print tomorrow. We also have the Fed next week, and next week is a quad witch OPEX. So there's going to be, I think probably, tomorrow and maybe even Monday, Tuesday will probably be quiet. Very light volume, much like today has been. I mean, only 54 million shares traded on the SPY. We're about to close in 30 seconds here. On the S&P. So I think we're really setting up for the Fed next week. We're setting up for the OPEX. And this market is back, it's basically, you had this move up here. You had the sell-off, found support, you had the move up, and now we're just kind of moving sideways here. So it is setting up to attack probably this trend line, which we broke down from, and possibly the all-time high there as the market is closing. Let's take a look here at the spiders. Nice dump on the Russell in the final 10 minutes. Yeah, nice little reversal. Semis were pretty weak today. Let's take a look back here, though. So ultimately, I think what we're doing is we're setting up for a possible one last push here. I do think volatility will come back, though. Now, that doesn't mean we can't make a nominal high first. But I do have, it's been a while. I haven't talked about cycles in a while, but we have a pretty big one coming up pretty soon. Towards the end of the month, I think could be a potential market turn. And I know we've had a couple of them. We've hit most of them, the cycles that I've laid out. It's just they haven't really played out as deep as we thought. But at this point, this is a pretty major one. I think that we will see some, at least the potential for a major pivot here going into the end of the month. That said, across the board here, for right now, we're backing and filling. Look at the triple Qs, semiconductors, XLE, XLF, even the Russell 2000, which has been a laggard. But, you can all see the same kind of pattern. We're just kind of, the diamond, up and now kind of sideways to negative. Trading kind of digest these gains here. The Dow is the strongest of the four indices right now, at least in terms of the last couple of days to week. Gapped right above all the moving averages on Tuesday, and has kind of held this upright range. And, that could be a little bit of a risk-off signal. The Dow is, the blue chip, sector, blue chip indice. So, that's something to be said about that in the near term in any case. Another area that has kind of lagged, we talked about the Russell. That has been lagging a little bit. But Tesla, we've talked about this recently, down 6% today. So that's, Tesla not regaining the highs. I like to use Tesla as a gauge for the risk appetite of the market. And right now we're seeing Tesla down 6%. And, everybody knows right now it's really Apple basically propping the entire market up. Even Microsoft has been a little bit soft as of late, no pun intended. Google kind of, flattish day here. And, NVIDIA pulling back a little bit today as well. That's dragging down the semis. Same thing with AMD. That actually down almost 4.5%, actually 5% there down on AMD. But interesting to see and watch Tesla. Tesla is a great leading indicator. I use it all the time for risk appetite. And, the fact that it has not gotten above that red bar on Thursday, the highs, or much less the highs of last week, it is a weak signal. You definitely don't want to see that if you are looking to be bullish the market. But again, I still think volatility will come back at some point next week. Now, the VIX has come in precipitously, like very much so. I thought there was a chance we'd probably chop around this trend line and kind of hold this upper range, but that obviously has not happened. And we talked about the other day how sentiment is just flipping back and forth, back and forth. We had sentiment here was all bearish, and then, we got up to here and it was all bullish. And then we got here and it's all bear, and now it's all bullish again. So now the Santa Claus rally is back on for the third time. And then we might get that, but I think the volatility will probably be at play again, probably as we get towards the later part of December, maybe into January. So don't fall asleep on it, but right now we're ultimately in backing and filling mode, in my opinion. Let's look at a few things here. We'll talk about yields. So 10-year here, down 1.5%, not a big deal. But when I talk about this TLT here, so I tweeted this out earlier, but look at this, broke out of this trend line here. And then essentially this has turned into a bull trap so far. If we take a look at the weekly, that's a pretty ugly red candle there. So that looked like a breakout. You got above the 100. You closed above all 4 major moving averages. And then, boom, huge rejection. You're finding support at last week's low. But if this closes below this trend line, that's a failed breakout there on the TLT. So that would be pretty bad if you, were buying into this breakout here. And that's why, personally, I don't like buying breakouts. I like to buy the back test or, I buy the consolidation afterward. But in any case, lots of bulls getting trapped there on TLT, so that is interesting to watch. By the way, we've mentioned this a few times here, but this continues to be a thing. Let's just look at, let's go down to like 3 months here. So really it's because it's the end of September, what we're looking at. But let's just slap on. There we go. Just bear with me. All right, slap on the TNX. So we're looking at the 10-year here. So typically gold trades inverse to the 10-year, and we know that. Why? Well, because, obviously if yields are going up because of growth, that's good for stocks, it's good for risk, so risk on, right? Which means, why would you need, you don't need gold if you're, if it's risk on, right? Gold's a safety play, it's a hedge, it's a risk off. Okay, well, what's been happening since September 29th? Gold and yields have been going up and down together. So what does that say? That says that the yield is going up because of inflation, not because of growth. That's an important distinction to make. It's not always one or the other, like, yields are up, so gold has to go down. This is very important because it means that if yields break out, it's not going to be good for the market. And it could potentially be good for gold. And it, typically we know, higher yields are better for financials. They're better for, small caps and stuff like that. But lately, I mean, the Russell, look at how red the Russell was here. And, yields have gotten a nice bounce here, but look at the KBE. The KRE, XLF. These have been kind of muted bounces here in those sectors. So they're not getting the type of bid that you would normally expect with yields being up, 10% off the lows. So it's, there's definitely a little bit of a concern here. Also, Bitcoin pulling back so far off the highs. Bitcoin typically is positively associated with risk, obviously. And as if the higher yield represents risk appetite, what is Bitcoin breaking down say about the risk appetite of the market with a higher yield or with a yield bouncing off the lows at any case? So these are all things that I think we need to watch moving forward. Just a little bit of food for thought. Now this correlation, it's been going on for 3 months. So it's been going on for a significant amount of time, but it's really not that much time in the grand scheme of things. But it's definitely something to pay attention to. If that continues, that is a major shift in the dynamic of how, gold and interest rates work. Now that, eventually will that correlation go back? Yeah, probably. But in the near term, that's something that we definitely want to keep an eye on. Anyways, let's just quickly go through a few more things. So crude also kind of in the backing and filling mode. So I did have resistance up at this necktie, never even got up there. But ultimately, if crude continues to go sideways here, probably, which it will into OPEX, I would think. There's probably plenty of premium to burn on both sides here. Either way, I think crude's just kind of in a backing and filling mode. It can still advance higher if it does that. And it can attack that 77 handle perhaps. So really nothing has changed from yesterday. Also nat gas, nice little bounce today, but ultimately this is setting up. It does have a nice weekly pattern here. I like the candle on the weekly, especially if it gets a strong close tomorrow to end the week. That would be a nice little bullish indicator for, going into next week. Possibly we want to fill that gap. Ultimately, though, the big level on nat gas is going to be down here around that 430 handle. So, but in any case, let's see, scan through. Not too much to go on. We talked about XLF. Again, watch the financials. If yields start advancing and financials aren't advancing with that, that is a major red flag for the market. But overall, near term, market's holding up. We're kind of backing and filling here. Semis are holding up fine. So ultimately, maybe they want to come down and fill this gap, but ultimately, we can actually get rid of this trend line now because that's failed. So, but ultimately, market is setting up for a move higher. How much higher it goes? Is it anything more than a Santa Claus rally? That remains to be seen. But in the meantime, we're holding up, and we're going to just kind of sit on, market's probably just sitting on the Fed and the CPI numbers that are coming up tomorrow and next week. Anyways, guys, take care. Thanks for watching. Like, comment, subscribe, etc. And I will talk to you all tomorrow.